You're listening to The Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of The Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And the conference season fire hose continues here, as we've got three interviews for you today that we captured last week at the Venture Tech Conference down in Frisco, Texas. We'll be speaking to the founders of Ares Fraud Solutions, Key Savvy, and Remint. That'll be coming up in just 1 second. Before that, we'll remind you can always find out more about the Best Innovation Group by checking out the website big-fintech.com. And if you happen to have a little open space on your calendar, this coming Wednesday, November 19th at 3 p.m. Eastern, noon Pacific, that will be the next meeting of our roughly monthly scheduled interval of the CU Digital Town Hall. A live and lively and interactive event that we hold runs about an hour, usually a group of about 50 or so folks discussing the hottest topics affecting the leadership in the credit union and fintech industry. It is free for you to join. You do need to register in advance, though. cutownhall.com is the way you can do that. You'll find some past episodes there, videos of those, if you want to sample what they're all about. Come with your thinking caps. We'd love to have as much interaction as possible and people sharing perspectives of what they see. So much going on in the space these days, I'm not exactly sure which topics. Like I say, the whole goal is to be timely. And there may be a whole new topic by the time between now and the time that happens on the 19th. But mark your calendar. Hope you can join us. And if you can't join us, again, cutownhall.com. You can watch the replay as well as all the past episodes, sessions, whatever you want to call them, that are posted out there. The big story that's kind of hard to avoid this week that we'll just mention, hopefully in passing fairly quickly, the Visa MasterCard proposed settlement, $38 billion with the merchants, still subject to a judge's approval. This one is, according to what I've read, was reached with the assistance of an independent mediator, with Visa and MasterCard working along with the merchants who had brought suit against them. Excuse me for not getting quite as excited about this one as everybody else, but I've just got this feeling we've seen this movie before. Just stepping back, this lawsuit's been going on for over 20 years. And there have been, you'll probably recall, there was a fairly big ballyhooed settlement that was announced just last year in 2024 for $30 billion. And the judge rejected it as being insufficient. So we've jacked up the settlement amount by about 25% over the course of a year. Not sure exactly how far that gets us. Even last year, I'm thinking, wait a second, I've heard this before too. You go back in time, rewind, and you'll find that there was actually a settlement that was reached and sounded like it had gotten pretty far along back in 2014, 11 years ago. That one was for $7.25 billion and eventually unraveled. As I read it, it was overturned because of conflicts among the attorneys. I have to go back to my memory banks or history to see exactly what happened on that one. But the bottom line is we've already seen two settlements come and go. I don't see a whole lot about this one that gives me that much more confidence it's going to stick. We've already got merchant groups that are assailing it, saying it's insufficient and they want to keep going. National Retail Federation, National Restaurant Federation. We talk about the complexities of a two-sided market. You want to get into complexities. This is really, I've always said that the card networks, it's a particularly perverse set of incentives. So you've got a relatively small group of merchants doing the bidding of the broader merchant community by filing a lawsuit. And then when they find something that meets their standards, the rest of the merchant community say, no, that's not what we meant. We want to do something different. So how you ever get all the merchants who themselves have very, very different motivations and incentives here to sing from the same hymnal, I'm not exactly sure how that happens. I thought it was interesting that MasterCard very specifically in the settlement announcement pointed out that this is a very good deal for small businesses because it seems like small businesses are carrying the water on these lawsuits. But when you really look at the details, almost all of the benefits are going to accrue to the big merchants, which from the National Retail Federation standpoint, I think they're the ones really driving their dissatisfaction. Restaurant Foundation, I'm not as clear about because there's a lot of small businesses in the National Restaurant Foundation, unless it's the big chains that really drive the narrative of their PR as well. Anyway, like I say, can't avoid it. Don't get too excited about it. I don't think it's going to go through, but that's just me. Let's get on with Venture Tech. The launch party was the first half of the Venture Tech. Great event, by the way, down in suburban Dallas, Frisco, Texas. 2 days, 24 companies overall took the stage. The first day was structured as the launch party, a dozen companies at a relatively earlier stage of life. And we caught up with the winner. Audience vote to decide which of those was the most compelling solution. The company that came out of that vote was Ares Fraud Solutions, which I had never seen before they got on stage. Found them intriguing. Let's have a listen to what they've got to say. I'm here with Lon Varnes and Colin Corrington, who are the co-founders of Ares Fraud Solutions, who won the launch party competition yesterday here at Venture Tech. Congratulations. I'd say it was a 12-group cohort that was going for it, and you guys won a pretty decisive victory.
It was good competition. There's a lot of good ideas out there.
There were.
So it's an honor.
I was disappointed. I was forced to vote for only one, but I thought you maybe vote for three or something.
Hopefully
like that.
You made the right choice.
Well, clearly the audience made the right choice. So congratulations on that.
Thank you.
Fraud solutions specifically around card. I'll let you talk about the fact that you're basically looking for a way to, approach fraud by breaking out the actual card present and card not present, and kind of creating barriers from the number being used nefariously.
Yeah, exactly. So our patent is basically dialed around making card not present transactions very specific. And so what we do is we simply put two numbers on the same card. So there's the human readable one that we relegate to just for online transactions or any kind of manual POS entry method. So anytime you read the number on your card, you're punching it into a system somewhere.
You need to be able to see the digits.
You need to be able, a human, that's why the number's printed, so humans can actually use it, see it, but anytime a human uses it, they're punching it in manually. Anytime you insert, swipe, or tap, that number is separate with our technology, and it is specifically relegated to insert, swipes, or taps. And so now if a fraudster steals the number off your mag stripe, which is probably the most common, and most people are aware of skimmers on ATMs and gas stations, or the newer, RFID readers, if they pull that number, they're actually pulling the second number. And it maximizes the EMV chip because now they can't go counterfeit it. That's what the EMV chip does, and we just stop them from using it in any manual entry mode. So they can't go use it online, they can't provision it to a phone, it's just locked down, they can't do it. So we always tell everybody, we don't really stop anybody from stealing your credit card data, we just make what they stole useless.
And just to point, you say you have two numbers on every card. Just to be clear on that, only one is visible, the other is embedded within the chip.
That is correct. So the visible number is not anywhere digitally on the card, and vice versa. The number that is digitally in the card is not written anywhere on the card, so that way members don't accidentally make mistakes.
Now, that was Colin speaking. Lon, I understand you've been in the card space for some time. One of the things that I was wondering about, to what extent does this require, you don't produce the cards yourselves. You're actually, this is the technology that you've created that allows this to happen, but you're actually working with the card manufacturers to create this additional feature?
That is correct. We actually work with the entire ecosystem, the bank or credit union's core operating system, whoever their EFT data processor is, and their card manufacturer. We don't inject any hardware or software in their data set or in their vendor stack. So we just work with them, say, hey, here is a smarter way to issue cards that's going to stop the vast majority of their fraud problem. And the benefit to the bank or credit union customer is that we're stopping one of the most negative experiences that their card holders have, and their card holders don't have to learn how to transact or do anything different. They just continue using cards like they've been doing over the last 20 years. That they tap, swipe, or insert it, one number goes. If they go to Amazon, they punch in the human readable number. So they just have one card, but there's two numbers, and they're each usable just in the channel that they're intended to be used. And that's all we're doing, is we're saying this can only be used this way, so we force it to only be allowable this way. And that's our process.
Now, I think you've mentioned you've already worked with several of the card manufacturers that are now enabled to do this, but it's a matter of obviously getting, integration with everybody.
That is correct. So most of the banks, credit unions that we're talking to are using one of 3 or 4 card manufacturers that we have relationships with already. We do have a couple that are outside, and we don't yet have that card manufacturer relationship. So we're either working with their card manufacturer to be able to support it, or we're willing to point the card production to a facility that can actually fulfill that.
Which becomes the incentive for the other manufacturers to get on the ball.
That's exactly it.
I guess if I'm hearing this correctly, the actual cardholder, I guess you could look at it two ways. It could be they could be unaware this is even there. They're being protected without knowing it. Or the institution could make it clear, hey, we've just added this new feature that actually keeps you safer.
And that's going to be at the credit union's discretion, but ultimately the idea behind it was that the card holder is completely unaware. We often joke that you can hand this card to your 87-year-old grandmother and she would use it just as normally as she has. Card fraud, Lon says this all the time, card fraud has been figured out. We can stop 100% of card fraud for the last 10 years because you can go into an app, turn that app on, or turn your card on or off.
Good point.
But nobody does
right.
it. And that's my mother always said that a person's smart, but a group of people's dumb. And that's literally what happened. We have the technology, but nobody's doing it because it requires a lift from the card holder. And there's all sorts of websites you can go put your card number in. There's digital first. There's all that kind of stuff, and nobody really does it because it requires a change in what they're doing day to day. And when you're standing in line at the grocery store, you don't have time to think about it.
That's an important point. Requires no change in behavior. Now, just to kind of reinforce something that you said, Lon, no change to the tech stack either.
Correct. Yeah, we leave the tech stack alone because we realize that is a major lift. And so the intentional design of this was to work with your existing vendors because we realize how hard it is to make changes or interject software and deal with all the compliance. So we just kind of found a way around it.
Now, Lon, you also mentioned that you've got a deal with DC, the Defense Credit Union Council, which I know you're pretty proud of.
Yeah, very proud of that. I'm a veteran, and I really appreciate the advocacy that group does for credit unions, and what a great partner that they are. So we announced this year at their Midwest Sub-Council Conference that we are officially partnering with the DCUC. They promote us, we promote them. And in exchange, what we do is we will discount any credit union that's an existing or future member of the DCUC. We will discount our services by the entire amount of their DCUC membership.
Wow.
So they can actually join an amazing credit union advocacy group for free. And we're helping with we're putting our money where our mission is, because the DCUC is a group that we care a lot about. We love the work that they're doing, and anything that we can do to stop fraud and help that group of veterans and the people that are helping protect our country, I think that's a big win. So
especially if you think about that group probably uses the card on a remote basis even more because they're traveling heavily. Mm-hmm. I can see how the use case is 100%. Even as valuable for them as it is for anybody.
Yeah, and they're big targets of fraudsters. I mean, they're getting a government paycheck, so they know that paycheck's coming, and they know how to get
Or maybe not right now.
Or maybe not right now.
Touche.
Well, this is great. If people want to find out more, Ares Fraud Solutions website, what's the best way to find you?
Yeah, AresFraudSolutions.com. You can look us up on LinkedIn. We're always at the big shows, FinTech Meetup, Money 2020, any of the DCUC shows.
And I will say that it's very easy to find you too because you've branded with the cowboy hats.
That's right. We're about as night and day different as most of the vendors out there in our space.
Well, it is kind of a nod to where we grew up. We grew up in a small town in Texas, and it's also just to kind of point out that we are the least techie fintech company out there. We don't have any AIs or APIs or any of that kind of stuff that causes problems, breaks down. I'm not saying it doesn't have its use, and there's a lot going forward with that, but sometimes the simplest explanation is the correct one.
I was about to say the simple solution could be the most effective. Lon Varnes, Colin Corrington, thanks so much, and congratulations again on the lunch party win.
Thank you.
I realized that I met these gentlemen, at least Vaughn, about a month and a half earlier, I guess, here in Atlanta at another conference where they had a much briefer period to speak, so I didn't really remember the solution. What I did remember was the cowboy hats. You don't expect, especially in Atlanta, a business meeting with a couple of cowboy hats. That is their calling card. So if you see a couple guys in cowboy hats at a conference coming up, stop by because it may very well be Vaughn and Colin from Ares Fraud Solutions. Let's get on now to a couple of the main stage companies. The second day of Venture Tech was populated around another dozen companies further along. Also an audience vote with a little bit more of a structure of 3 separate brackets where we voted down to the 3 finalists and then kind of a pitch off. Also purely audience vote, but with a lot more Q&A, which is to me what really differentiates Venture Tech from a lot of these other conferences. It's not a small judging panel, it's the entire audience. And I think the audience was a good 400 this time, if I'm not mistaken, with an open mic. So after the company pitches for, I believe it was 5 minutes, you have another 5 minutes of Q&A. to get to a little bit more of the details. One of the companies that I thought was very interesting around that was called Key Savvy, another one that I'd never seen before. So let's have a listen to what I heard from their founder, Andrew Crowell. I'm here with Andrew Crowell, the co-founder and CEO of Key Savvy, one of the companies that really caught my attention today at Venture Tech. And based on my conversations at lunch, I wasn't alone. I think a lot of people, it really kind of struck a nerve is, addressing a pain point that comes to a lot of credit unions. And you mentioned that you're kind of obsessed with this topic, which I thought was pretty funny. Private party auto loans. You're not going through a dealer, but actually selling a car on your own.
Yep.
And you actually manage the paperwork and the title transfer and all that kind of good stuff behind it. So say a bit more if you would.
Yeah, payment and title transfer are the two main things that we guarantee. It's really the biggest problem in private party sales is it's a lack of trust and convenience. Typically when people are buying on Craigslist or selling their car on Facebook Marketplace, they're literally showing up to a Walmart parking lot with a bag of cash, and they're signing the title on the hood of their car.
I'm just thinking about the definition of risk.
Yeah,
I mean, because one of the points,
and it's a lot of money, right? Even a cheap car is a lot of money.
And one of the points you made was, you can get a better deal by buying privately.
A way better deal,
but again, there's the risk
if
return
you're willing
trade-off.
to,
you may get scammed, you may get rolled when you try to pick up the car, and you're taking care of some of that.
Yeah, it's more work to do it on your own.
I've always shied away from it, I can tell you that.
Yeah, but a lot of people don't, right? It's really surprising to most people that almost half of the total used car market is private party. It's 47%.
Wow.
So it's literally, dealers get tons of attention, right? Because there's a lot of money there, and they make it easier. That's the convenient option. 100%.
And that is also typically the credit union channel. Auto loans are big, but they tend to align with a dealer, and that's the distribution channel.
Yeah.
You're saying there's 47% of the market out there that's available here.
Yep. And less of it is financed compared to the dealer retail space, but a lot of that's also due to poor access to financing. Because if you search on Google private party auto loan, because you found a car from a private seller, you want to finance it, not a lot of options come up. Most credit unions don't say anything about private party auto loans on their website, but they'll do them if you call. Right, they're willing to do the work to do the loan, but they're not. They don't really lean into it.
And the key being work, because you mentioned it's not easy. You've got to validate the title and all that kind of fun stuff. So, how does the process work? What would your solution?
Yeah, so what we do is we're technically a licensed dealer.
That's right. You mentioned that you actually take possession of the car.
We take possession of the title.
Sorry.
Yeah,
right.
Because we're not. Yep. It's interesting. We don't take physical possession.
But it's like an instantaneous transfer. Like the second you get it, you just pass it along.
Exactly. Yep. So we never have any inventory. We don't own any cars at any given time. Our ownership is sort of a legal fiction, is what our attorneys like to call it. So we buy the car from the seller and instantly resell it to the buyer. But what that does by inserting us into the chain of title is it enables us to use our dealer license as well as all of the tech that we've built to make this actually work really, really well for buyers and sellers and provide a good experience. We can take what dealers do well for consumers, like issue temporary permits, pay off loans. We have access to electronic titling services in multiple states, so we can flip titles into our name very, very quickly. All these things that regular consumers and even credit unions just can't do. But we're using those capabilities to apply them to a totally different side of the market, the private party side.
And by definition, then, the credit union is working with you, and there's a greater level of certainty because it's somebody who knows what they're talking about. You're going to be more confident about the title as opposed to worrying about some weird nuance that pops up. You've taken care of that up front.
Yeah, exactly. Instead of dealing with, let's say you do 100 private party auto loans in a month, that's 100 different private sellers. And if half of them have loans, it's probably, 50 different lien holders that you're dealing with too. Instead of that, it's just us. We're dealing with all of the complexity of the private, and we've built technology that makes us really, really good at it. So it's not just, our people are doing the work instead of the credit union's people. We've built a platform that walks the buyer and seller through this, and we're managing all the flow of funds.
I just remembered that something you mentioned that was amazing. You did some advanced research of the credit unions that are here at the conference.
Yeah.
You said that 3/4 of them, have you found, actually have members not doing it through the credit union, but they've used your platform to execute one of these transactions.
Yep, they found us. We have a different side of the business that's a bit more mature than our credit union partnership side. And so as a result, we've worked with a lot of credit unions through not through formal partnerships. Buyers and sellers have found us through like our own direct-to-consumer marketing or through our marketplace partnerships, but they still want to finance sometimes, and they will often want to finance with their credit union, or they find a new credit union that they want to finance. And so tons of credit unions, I think it's over 350 or so different credit unions, have actually funded loans with our process.
And they're aware of that. They would know that they're working with you?
They would know because we look like the dealer of record. They may not fully know
Think
at
about
that
exactly
time.
how you fit in the mix.
Yep, but it often, it'll come up sometimes, and sometimes credit unions will sort of like dig in, or their buyer will tell them about us or something like that, and then we end up, engaging with them, and which is a super cool way to get to know credit unions.
So at this point, you are looking at that as a more kind of central channel. How many credit unions at this point are you working with?
Oh, we have I think we have about 45, 50 in the pipeline right now. They're
And
not all live.
And of those, I mean, did a lot of those come for exactly the reason you mentioned, that they already were aware of you? Hard to kind of isolate it.
No, I would say most of them have come from like the outreach that we've done at conferences like this. And I would say mostly that, and some of our other like direct outreach that we've done on LinkedIn and things like that. A handful, I would say maybe 10 or so have come from, my buyer told me about you or something like that.
And I see, you also mentioned this does not require deep LOS integration. It's a pretty straightforward process.
Yeah, that's right. It's basically like a referral style sort of affiliate agreement and process of handing over. So the buyer goes to the credit union to apply for a loan. The credit union learns they're buying from a private seller. Once that loan is approved, so that part is all exactly the same as it is today, except some credit unions may want to add, some changes to their application flow to understand, to open up a private seller. But then as soon as that loan's approved, the credit union can then just share a link with the buyer to us, and we'll give them a special page that they can refer that member to.
A branded page?
Yep, a branded page.
And then you take care of all the nuances and complications.
Yep. We'll onboard the seller. We get pictures of the title or details about their loan if they have one. We're getting the 10-day payoff. We're getting everything like that, verifying that the seller is who they say they are, that they own the car, onboarding any co-owners, like all the complexity, right, of vehicle transfer.
And then you also mentioned the buyer typically pays the fee, which is not that unusual, right? That's kind of the way things are typically done in this space. And it could be rolled into the loan if chosen.
Yeah, exactly. Since we're a dealer, we'll apply it as a dealer documentation fee, which has a small advantage to most to buyers in many states because they'll often not have to pay sales tax on that. But it also it's financeable without impacting the APR.
And the credit union, if they choose, can subsidize in some fashion. And then we were just discussing before we started recording, you're also looking at the other side of the equation where if a seller is a credit union member, this may be a benefit that would be available as well.
Yeah, exactly. Because it's a great financial choice, right? If you, let's say your vehicle's worth $20,000 for trade-in, a dealer offers you Carvana offers you $20,000 to take care of. You could probably make 24 selling on like Facebook Marketplace. So credit unions can offer that as a solution, and then they can tell the member, hey, when you do find a buyer, we have this partnership with KeySavvy. It helps you complete the transaction safely and easily. And then they'll get a discounted rate with us, and they can have that peace of mind, and they got that intro from the credit union.
Another one of those risk profile things. It's cheaper to buy a car this way. It's more profitable to sell a car this way because you break out the middleman.
Exactly.
But you're bearing the risk and the headaches. It's a pretty interesting economic model. So like I say, this sounds really interesting to me. It obviously was very interesting. You voted, you polled very well. And
it was so close.
That was a photo finish. I think depending
really
on when they decided to close the polls, you could have wound up with a different solution.
I know.
If people want to find out more, it's keysavvy.com.
Yeah, keysavvy.com/CU. That's our credit union page.
You've got a specific page there.
Yep. Yeah, and you can reach out and schedule a demo with us, and we'll show you a lot more and learn about your private party process too, and see how we can help.
Great stuff. Andrew Crowell, KeySavvy CEO and co-founder. Thanks so much.
Thank you.
So as I mentioned, both Aries Fraud Solutions and KeySavvy were new to me. The third company we talked to, who also was one of the main stage competitors, is someone I've been familiar with for some time now. I think right to the very origins of the company. Gwyneth Borden of Remint, who's, in my mind, really a great case study for the trials, tribulations, successes, and perseverance of a founder, particularly a first-time founder. We'll talk a little bit about that here, but she's been at this with the typical kind of pivots, funding challenges, but everything going, at this point, kind of the pieces coming into focus. She was on stage at walking through her solution. Again, let's have a listen to my conversation with Gwyneth Borden. I'm here with Gwyneth Borden, the founder and CEO of Remynt, R-E-M-Y-N-T,
yes.
Who just presented here at VentureTech. And Gwyneth, I'm going back, and you reminded me it was actually 3 years ago that we first met at Money 2020 when you were one of the featured startups.
Yes, I was at the very beginning of my journey.
Quite a journey it's been,
yes.
And I think we also reconnected. I didn't realize it was actually about 18 months ago where you won Best of Show at Finovate Spring
yes.
in 2024.
Yes.
And here you are again. You are a QSO now?
I'm a QSO now, and we are here at VentureTech. This year we're in the main pitches. We actually were selected last year for the launch party pitch, but I ended up sick with pneumonia in Mexico City and missed it.
Oh.
I didn't say that. I meant to say that on stage. It was funny, but it's not funny. But the point is that it was a journey to get here.
Yeah. Well, I guess about a 3-year journey, too. I'm sure a lot longer than you expected when you started, but all's well that ends well. You seem to be on a nice bit of momentum right now.
Yeah, no, it takes a journey in financial services, especially since we're building in a space where there's licensing requirements in multiple states. We have credit builders. That's like a whole fintech and bank partner behind there. And so there's a lot more. It's not like a two-sided marketplace. You set it up
right,
to go.
Exactly.
Right?
And you've also stayed true for the most part, as far as I can tell, it hasn't been a pivot. You've stayed true to your initial model, right?
Yeah, for the most part. I mean, we bought debt ourselves to do it on our own, and we had this idea of doing both, kind of more direct and also doing the B2B. And I think we realized, starting out, that's hard to do that on your own. Also, just with the state of consumer financial health, people pay slow and low. When you buy that, it takes a while to create familiarity, right, with a consumer. But working directly with a credit union, people trust their credit unions, they know their credit unions, and so it's a different experience when you're partnering with someone that they know, with a member knows or a customer knows versus otherwise.
So it is a little bit of a recurring theme that I see of somebody who was originally going direct to the consumer and now working through the financial institution channel. But your quote-unquote product is very different than what I usually think of. Let's kind of step back and remind people, you're basically a debt collection service with empathy?
So we're a debt collection with a focus on financial wellness. And so the whole idea is that, when someone falls behind, they typically have multiple debts in arrears. They are in a crisis point trying to determine how to pay their debts and also live their life. People forget that. The process often treats them with indignity, treats them in a manner like with fear and shame, pressuring them to pay, and increasingly in a world of convenience, consumers are going to debt settlement or bankruptcy or other routes. So basically our product is really about enabling people to repay in the way that they can on a self-care platform without having to talk to anyone because no one answers the phone.
Meet them where they
are, set their own payment plans, and have that agency to do that, to settle their debt and do all those sort of things, pay with multiple different payment types, pay on time frames that work for them, on dates that work for them, and then the cornerstone being the financial wellness aspect where there's a credit builder embedded in the product, personal financial management tools, and even a community where we have programming with the financial therapist. The whole idea is meeting people where they are when they're most vulnerable, giving them the hand up to help them get their finances back in order, start to repay and rebuild, and you'll actually have a more loyal member going forward.
That's where I get kind of the interesting kind of premise here is, this is a member worth saving. This is not somebody that you've written off, literally and figuratively. So again, you can actually maintain a relationship, and probably a very loyal relationship, if you've actually helped them through this process.
Exactly. I mean, right now the competition in financial services has never been more intense, whether it's other fintechs, the big banks, community banks, other credit unions, and everyone's fighting for what they call the top of wallet. Mm-hmm. And at the end of the day, the cost of customer acquisition is super high, whether it's a new member and you're trying to indirect route, or if you're another kind of financial institution. And a lot of credit unions can't really compete on some of the benefits and sort of perks that other kind of financial institutions, especially some of the fintechs, offer. But more importantly, the thing is you're fighting against all of these institutions to get and maintain members, and the best member you have is the one you have today, not the one that you're trying to get. And if you can actually help them through the most difficult time, right, when someone falls behind into collections, then they will be loyal to you forever, because that is a value prop that other people don't have.
I'm just thinking there's a fundamental premise here
that these individuals want to repay their debt. They're not deadbeats. They just are in a situation where it's difficult.
Well, particularly right now, when we look at delinquencies are actually the highest they've been since the Great Recession. People across all socioeconomic demographics are living paycheck to paycheck and saying that they're in financial distress. Mortgages are starting to trend up in delinquencies. Car loans. In fact, I think it was last month that VantageScore said that the highest increase in delinquencies among car loans among super prime borrowers.
Wow, I didn't see that.
So we're actually seeing a place right now where people across all income levels, all normal pay ability levels, are struggling. Everything's costing more. Jobs are shrinking or going away. People's income hasn't kept up with things. People are having to transition to gig work. There's a variety of challenges that are happening, and most people aren't deadbeats. I mean, our entire economic system is built on the fact that most people do pay their debt back, right? There's a small minority that doesn't.
Right.
But the world would have you think otherwise. But we wouldn't be lending if that were the case.
And even if you do fall behind, it doesn't mean you've suddenly joined the dark side and have no intention. Well, which is another thing I was not aware of until you mentioned this. Once debt, I don't know if it's literally written off or when it's sent to collections, once you actually pay off that debt, it's too late. It's not going to improve your credit standing, your credit score. So you've actually created a situation where it will.
Yeah, so the way that credit scores work, they work on open accounts that you're actively paying or not paying on. Once the account's been closed, no further activity is no longer reported in that same way, and once it's charged off, it's also the same way. If you pay that debt after that fact, at best, your credit report will say paid in full or paid settled. But that's not, for your score calculation, it doesn't help you.
Okay.
And so what people need when they're in that situation is an ability to rebuild their credit. And typically what happens for lots of people when you have a charge off and then you start to pay, you try to rebuild, the first people that come after you are the super predatory product with the low credit limit, $300 credit limit with a setup fee and an annual fee tacked on. And then the loan products you're offered are super high interest rate loans. And some people get stuck in that kind of credit purgatory for a while, and it's really hard to build. You have to get secured cards or deal with those products along the way. And when we were doing early research and actually finding those consumers out there who had charged off debt and had not paid at all any of their debt, the number one reason, 56% that said that they would pay, would be to rebuild their credit. Because the one thing that's super hard to do, once you kind of fall off and you drop your credit score, it's really hard to rebuild.
A couple of things you point out. Again, I think you said before, you have no preset payment plans. People actually, you meet them where they are. And speaking of meeting where they are, I thought was fascinating is you find that a lot of actual repayments, at least in small amounts, come from PayPal.
Yeah, and it can be a $10 or $20 payment or a $150 payment. And I think the reason being is there was a study that came out, I think it was about 2 years ago, on average Americans keep about $216 in their peer-to-peer payment accounts. So you just think about for nights out with dinner with friends where your funds go back and forth, you can actually start paying on your debt.
It's almost a hidden little pocket of money that you may have forgotten about.
But the other part of that is with overdraft fees, you don't have any overdraft fees if that payment doesn't go through.
I remembered you said that, and that really resonated with me.
And that is another reason why I think people prefer those peer-to-peer payments. So A, it feels sometimes less like it's coming out of their core money. But B, then there's these other things around like not having overdraft fees.
The downside of not necessarily getting your math right. Yeah.
And then the other part of it is that many people are relying on these accounts. If you're in a situation where your checking account's been overdrawn, right, then you're spending out of it. Those peer-to-peer payment accounts are how a lot of young people transact money. A lot of people in the services businesses, whether it's like hair salons or barbers, lots of people use those accounts because they can get and maintain their money without being feed to death, right? Because a lot of institutions, not so many credit unions so much, but a lot of other institutions have minimums, and you get charged a monthly minimum if you don't have a certain amount of money in your account all the time. And if you're the kind of business where you're not getting a direct deposit, right? If you're in a services kind of business where you get paid off one-off in that sort of way, you don't have maybe a normal lump sum sort of direct deposit. So that's the benefit that allows you to bypass those fees, you may have access to that. So I think that people forget about some of the reasons why these peer-to-peer payments became a thing and why people like using them. The ease of convenience of moving money is, and not having to deal with fees is the number one reason why a lot of people use these accounts.
That makes a lot of sense. That's a good reminder. So you are live with...
So we have two credit unions, Southwest Financial and WSEU, that we're working on getting live with.
Okay.
And we also have a community bank and a fintech, and we have a whole bunch of credit unions we're talking to that we're hoping to be able to announce by
Southwest Financial, that's the small credit union
yeah, that was
on stage
on
today.
stage today. Yeah, Melanie and then WSEU, and so of course WSEU is also our QSO partner who invested in us, and we are also looking for more QSO partners as well as more credit unions, because really the reason I wanted to work with credit unions is because our ethos is the same. At the end of the day, we care about helping people and people's financial resilience, and I believe that collections is poised for a change. We've seen the way the world has gone in general, right? Fear and shame tactics don't work anymore. You know, you think about the evolution of, I think I talked about it on stage today, of debt collection, where it was like indentured servitude and slavery to now like, and actually imprisonment, right? Yeah. And now we're at this place like, no, we need to treat people with dignity. And you actually, if you treat people poorly, they're not likely to pay you back. And you're gonna create an adversarial approach where you're either going to have to sue them or just write it off.
So if people want to find out more, GetRemint.
GetRemint.com is our website, and Gwyneth, GWYNETH at GetRemynt.com.
And as we talked about credit unions before, True Stage Ventures, one of your primary investors?
They're our largest institutional investor. We have other VCs firms as well, and WSCU is on board. And so we're really proud to have the support from the industry, because we do believe that we can help change the way that the credit union industry can change the way that debt collection is done forever, and everybody else will be following.
It's a great mission.
Thank you.
Gwyneth Borden, founder, CEO of Remit. Thank you.
Thank you so much, Glenn.
So there you have it, 3 of the standout companies from the Venture Tech Conference last week. I'll just give a little preview for next week. We have 3 more interviews from Venture Tech. As I mentioned earlier, the competition process where there were 3 brackets of 4 on the main stage event. There was an individual audience vote to narrow that down to the winner of each of those brackets, and then a pitch off at the end of the day. We have interviews with all 3 of those finalists, which of course includes the ultimate main stage winner at Venture Tech. And kind of whet your appetite for that one. It'll be up next week on our weekly podcast, at which point I'll be down in Austin, Texas at the FinTech Talents Conference. So again, no shortage of things going on in the industry to take a look at new solutions and share interesting thoughts. As always, we thank you for listening to the Bigcast. My name is Glenn Sarvati. You can track me down via my firm 154 Advisors. You can find out more about the Best Innovation Group by checking out the website big-fintech.com. You can find out more also via LinkedIn, where you'll find me as well. And you'll find out all about the great solutions, bigmerger.ai, other voice response AI type solutions, lots of things that the Best Innovation Group can do for you with regard to your many needs on the tech side of credit unions. We're back weekly with new content, as I mentioned. You can also find us on Spotify, Amazon, Apple, etc. And all of these locations, you'll also find a robust back catalog of our past episodes. If you're interested in hearing about these younger companies, you may want to scroll back just a little bit, and you'll find the similar interviews we did after the Finovate conference in September. And of course, our coverage of Money 2020 also included some young companies. That was just last week that we posted that one. So more of that. And as I said, more to come this coming week with the 3 finalists from Venture Tech. My name is Glenn Sarvati, and as always, thanks for listening.
Check back each week for the latest from the Bigcast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.